Hey everyone, this is Dimitri Pargamotic with MarketChameleon.com. In this video, I'm going to show you an example how you could use a stock's historical stock behavior to help create strategies from an options chain. And we're going to use Tesla in this example. And I'm going to scroll down here to Tesla's options chain. And from the left-hand side, I picked the September 15th expiration. And as you can see here to the right, this populated the September 15th options chain. And now we see all the different options available and their prices. So when we're looking at the options chain, one question is, well, where do we think Tesla stock will be at expiration? And of course, there's no way of knowing that for sure. If we knew that, then this would be very easy. So the next question may be, well, can we come up with potential outcomes based on data? And up here, there are two different stats that we show based on historical behavior of Tesla. So the first one, the seasonality, answers the following question. We know what today's date is, and we also know the date that this option will expire, right? So all these options will expire September 15th, and we know what today's date is. And our question can be, historically, during this similar calendar period, what did Tesla stock tend to do? Does it have some kind of seasonality impact? And that is what this stat here tells us, that between August 10th, which is today, and September 15th, historically, Tesla was up, the stock was up 83.3% of the time. And on average, if we took the average of all the returns, the stock gained 6%. So if we wanted to pick a target strike based on that 6%, we could start from that. The money is, and as you see, as I'm hovering over these different strikes, it tells us how far the strike is from that. The money, and at this one particular 260, that would be 6% away from the spot price. If we hover over this, we also get a little bit more stats. Here it tells us that if we divided the up moves and the down moves into two different buckets, on average, the up moves were up 10.1%, and the average of all the down moves were down 14.1%. So we do see that when Tesla was down, the average magnitude of those moves was greater than the up moves. So that's something to keep in mind. But the best move out of that period was 58.5%. The worst move was 17%. So we do see that there was a very big move outlier to the upside. Another question can be is, we know that between now and September 15th expiration, there are 25 trading days. Okay, so there are 25 days that Tesla can trade between now and expiration. And the question could be, what does typically happen to the stock over a 25-day period? Because that's a long period, and there could be lots of things that make the stock drift one way or the other as more money flows into the market, inflation and pension funds and so forth. So the question is there a drift over a 25-day period? So that is right over here, the drift. And we see over a 25-day period, Tesla is up 62.5% of the time based on history. So historically, that's 62.5% of the time Tesla stock was up, for an average gain of 11.2%. So the 11.2%, if we hover over, is right around here, around the 273 strike. And if we hover over the drift, we could see that on average, the up moves averaged 28.3%. The average of all the down moves were 17.1%. The best move was up 86.2%, and worst move was down 41.2%. And now we kind of have an idea of how the stock tended to behave around this calendar period and over a 25-day stretch. So we have some potential outcomes and some target strikes that we could start looking at. And just as an example, really quickly, and this is not a recommendation, but if we thought that the target was 6%, right, and that's where it would stop, we could start by selling the 6% out of the money call. If we're bullish, maybe because it tends to rise, you could start by looking at the money call. So that would be a bullish call spread, right? And maybe if you thought if it breaks through there, maybe it stops at 11%. So sell that. And let's see if we close out of it up. What's that? Let's say 285. Let's see how that looks. So you could see here, this would have a bullish skew. You know, your sweet spot is right here in between that 260, 273 strike, the max. And you could play around with this, obviously, but this is one example of an idea of looking at the options chain and starting out with potential moves in the stock. Hope you guys like this video, and hope to see you guys again in the next video. Thank you.